Hello, my name is Sharman Johnson, and I will be walking you through the Chapter 4, Exercise 5 tutorial. Okay, the problem is in its first year of operations, Sheridan Company recognized $31,000 in service revenue, $7,700 of which was on account and still outstanding at year end. The remaining $23,300 was received in cash from customers. The company incurred operating expenses of $20,100. Of these expenses, $13,090 were paid in cash. $7,010 was still owed on account at year end. In addition, Sheridan prepaid $2,950 for insurance coverage that would not be used until the second year of operations. So the first part of this exercise has us calculating the first year's net earnings under the cash basis of accounting, and then the first year's net earnings under the accrual basis of accounting. Starting with the cash basis of accounting, we start with typically cash basis of accounting deals with actual cash received and actual cash spent. So we start out with then that $23,300 was received in cash from customers. So we start with that as our cash received, cash revenue received. We then subtract out the cash expenses that were paid out. $13,090 were the expenses paid in cash. And then as a side note here, they mentioned that the prepaid insurance was paid for in the amount of $2,950. So under a cash basis, that would be seen as an expense. And therefore, our net income would then be $7,260. Now, under the accrual basis, we're dealing with the revenue recognizing principle. And so we deal more with actual revenue received, whether it was received in cash or if it's still waiting to be received as an accounts receivable. So according to our instructions here, they recognized $31,000 in service revenue. So we'll start with that, $31,000 in revenue. Then according to the matching principle or the expense recognition, then the expenses that were matched with that revenue. And we find up here in the beginning in our problem is that the operating expenses were $20,100. So we then would subtract out $20,100 in expenses, which brings us to a $10,900 net income. Now, we don't calculate out the insurance expense because while that was paid for at the end of the year, we won't expense that out till the following year. And accrual deals with what happens in the period in the period that we're in. So the second part of our question here is which basis of accounting, cash or accrual, provides more useful information for decision makers? I would say, and I believe our book would agree with us, is that the accrual basis is the more useful of information. Cash basis has a tendency to either overstate income or understate expenses in a given period, whereas accrual deals with the specifics of the revenue and the expenses. Thanks for watching this tutorial. If you have any questions, please let me know. Thank you.